The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Monday morning. You're watching Squawk Box and we are coming to you live from Dresden in eastern Germany and CNBC HQ here in London. These are your headlines.
Germany's AfD becomes the first right-wing party claiming to win a state election in Germany, claiming victory in Thuringia and a close second in Saxony.
Chinese equities on the back foot as official data shows the steepest decline in factory growth in 6 months. Tens of thousands of people taking to the streets in Israel, angry at the government's failure to strike a ceasefire deal after the bodies of 6 hostages are recovered in Gaza.
X is shut down in Brazil following an order by the Supreme Court as Elon Musk refuses to comply with local laws amid a row over misinformation and hate speech.
It's been 5 weeks,
Yes.
I think, since we've been back on set together.
It's been a wild summer.
How was your summer?
It was eventful.
Oh, right,
Came back from holidays and then the market.
Yeah, I
was
saw
in
that.
meltdown.
You had the market crisis and meltdown to deal with at the start of August. By the time I'd come back,
It
3
bounced
weeks
back.
later, it was like life's the same. Markets were hitting record highs.
We fixed it by the time you came back.
Well, yeah, it all seemed the plumbing was done. So
Exactly.
I don't know. I don't know what everyone was worked up about in that first week of August.
So nothing got broken over the past week. It all looks fine.
Not by me, I hasten to add. But there are seismic political events going on,
There
of
are.
course. Of course, we're all looking to what's going on in November in the United States. Enormous ramifications, but also for the German elections next year. And regional elections in the meantime are sending seismic waves across Germany and Europe because Germany's far-right Alternative for Deutschland Party, Alternative for Germany, or AfD, has won its first ever regional election. The party swept to victory in the eastern German state of Thuringia, taking nearly 1/3 of the vote. However, the AfD is unlikely to be forming a state government, with all other parties pledging not to go into coalition with this group. Now, despite that, the AfD is expected to have enough seats to have a bearing on policy making. Meanwhile, in Saxony, the ruling Christian Democrats reclaimed first place in Sunday's state vote, narrowly defeating AfD. The head of the state government, Michael Kretschmer, said he expects the CDU to remain in power, but admitted coalition building will be tough after his current partners, the Social Democrats and the Greens, suffered an absolute drubbing. Right, there's a lot to break down here, so we're going to do this throughout the show, and that's why Annetta joins us from Dresden, which is the capital city of the German state of Saxony. Annetta, I've had the privilege of being in Dresden, which is an extraordinary rebuilding given what happened to it in history as well. It is an amazing city as well, but clearly the people of Dresden, the people of East Germany, still have enormous concerns about what the key main political parties in Germany are doing for them, primarily economically.
Yes, indeed. It's not primarily only economically, sorry to correct you here. It's also much about migration, and it's also much about sending weapons to the Ukraine, because the majority of people here on the ground in eastern Germany is actually against delivering those weapons to the Ukraine. That's one of the reasons why the new party from Wagenknecht, the BSW, has scored so high in these elections, both in Thuringia and also in Saxony. And at the same time, migration is a huge topic here. The rise of the AfD has actually really started with the refugee crisis in 2015 and 16, and that is when they really gathered momentum also across the east. So where we stand now is we have the AfD first in Thuringia with a big gap to the CDU, and a very narrow or close second here in Saxony. It will make coalition building really rough for for the individual parties, for the CDU, because nobody wants to form a coalition with the AfD. So despite them scoring so high, they will not be in any of those parliaments, most likely, I have to say, because it's very, very early to declare victory here in a way for the CDU. But perhaps we listen in, because we went to the Landtag, the regional parliament, or the federal, the state parliament yesterday night, right after the election, and we caught up with the candidates of the BSW, the new party from Wagenknecht, and also the leading candidate of the AfD here in Saxony. Take a listen of what they said about the economy.
We've had some important statements, such as from the head of the Deutsche Börse, that this is actually not the problem of the economy at all. The economy in Germany has completely different problems. We have high energy prices, we have the highest taxes, we have bureaucracy that's overwhelming us. That's the reason why companies in Germany are now turning away from us. The AfD wants to clean this up. In this respect, for everyone who may feel afraid, who really feels that way, don't be. You're included in our programme. We're a very business-friendly party. We know that a good, stable economy is the foundation for everything else.
We will of course support the economy. This includes programmes such as winding back bureaucracy, which has already been a contentious point for some time. But to this point nothing has progressed. And the skilled labour shortage. How can we pinpoint and bring back skilled workers to our country? On Ukraine, we certainly want to go via the Federal Council to ensure that it comes to negotiations between Ukraine and Russia. And that above all, we achieve a halt to weapon deliveries, because it cannot be the case that more and more people are dying, and we continue to support this with arms deliveries.
To say something positive, the BSW, which actually scored some 12 to 14%, is also not going to form a coalition with the AfD, who is like straight classified as right-wing in the state of Thuringia, with Höcke being actually even sentenced for having said similar sentence like some people back in the Third Reich under Hitler. So this is a very, very difficult situation. So what does it all mean, though, for domestic national policies? Because that, of course, is the big question going into the next year, where we have national election. The debate has already started in Berlin whether Chancellor Scholz will be the right candidate for running for chancellery again for the Social Democrats, because they have such a poor showing in those state elections here in Saxony and also Thuringia. Also, the Greens have suffered a lot, so they also rethink what they should do better to actually explain their policies. In a way, the CDU is the big winner, if one might say so, when it comes to the traditional parties in Berlin, with Friedrich Merz already sort of having restarted, or kind of his standing also when it comes to national policies. The migration debate is very high on the agenda these days, after the stabbing in the state in the city of Solingen. So I guess national policies will be shaped also by those election results here in Saxony and Thuringia, because people have voted with their feet. They want to have a different policy. They want to see real economic policies against the affordability of living crisis. They want to have less migration, a much tougher stance, and parts of the people here on the ground at least want to have an end to weapon deliveries to the Ukraine, which of course will be very difficult to debate on the national level, because all the mainstream parties are in favor of that. The BSW is the kingmaker here in the state of Saxony as it looks right now, because the former coalition doesn't have a majority anymore, and they want to have a commitment that things are going to change when it comes to the help to the Ukraine, also on the national level, before entering a coalition with the CDU. So very tricky situation, and perhaps even impossible to form a coalition.
Annette, it feels as though the situation has just become much more complex politically in Germany. As we think about even just the last number of months, the economic situation across Germany seems dicey, touch and go in terms of recovery. Lots of complaints from CEOs about the level of regulation. Now, as we talk about the rise of populist politics again, particularly in eastern Germany, it adds just more complexity as we count down to the next election. What do political leaders need to do from here to secure some sort of beneficial outcome for the centre ground as we head towards the next election?
Well, I think that is like the million-dollar question, I have to say. What we see, what happens right now, also already on the national level, that happened last year, is that they are going to get tougher on migration, much tougher, because there are many people here in the country which actually shouldn't be here, but they can't be pushed out of the country because the countries where they come from don't want to have them back. So, and the asylum policy here in Germany are very tricky, and these needs to change. As I said, Friedrich Merz has initiated the debate on that, and Söder, the Bavarian Prime Minister, is also pushing very hard to get those laws tougher because people want that. So this is what we're going to see probably happening or unfolding over the next couple of months. And I think it's a hope from the traditional parties, especially from the Conservatives, to get people back in their camp who are disgruntled with the situation of when it comes to migration. When it comes to economic policies, of course, there's a lot of red tape in the country. People are complaining about that. Whether we're going to see very fast steps to actually cut down on that remains to be seen. And of course, the current government is probably not the right one to do that because they are also going into the election cycle. So to be fair, I think the debate will be heated, but whether we are going to get actionable results remains to be seen.
Superb coverage. Thank you very much indeed for that. And if ever there was a city in Europe that symbolised the horrors of war, then I would suggest our viewers take a look at Dresden and what happened to that magnificent city at such a key point of the Second World War. Terrifying. Right, we'll have more analysis throughout the morning following Sunday's votes in eastern Germany. This hour we're going to hear from Dirk Röborn, who is the chairman of the Semiconductor Producer Association Silicon Saxony, and on Street Science, Annette will be speaking to the president of the German Institute of Economic Research, that is Marcel Fratscher.
Let's turn to China in the meantime, as Chinese manufacturing numbers have swung back to growth in August, according to the latest Caixin PMI reading, which came in at a better than expected 50.4, with consumer and intermediate goods firms leading gains. But export orders fell for the first time in 8 months and at the fastest rate in almost 2 years. But official manufacturing PMI data painted a more gloomy picture. Factory growth fell to a 6-month low of 49.1 in August, worse than expected and the 4th straight month of declines. Let's get to Xiaolen Chen, who is head of international at Crane Shares. Thank you very much for joining us again. Let me ask you about what we're seeing in the data, because again, a mixed picture. The latest Caixin numbers suggest small, medium-sized companies are showing some expansion, but we're not seeing that in the official numbers. So again, very mixed in terms of the data. What's your reading on just what the growth story is looking like?
Thank you, Karen. Thank you for having me on your program. Manufacturing sector clearly had a bit of a mixed picture in August due to some of the seasonal factors. The weather was very hot. I think it's also a holiday season in the country. Also, the orders slightly coming a bit declined. So you see the manufacturing sector's number, marginally declined to 49.1. But you do see the service sector, which is more of where the country want to focus to rebalance its economy to, has literally increased to over 50.3 in August, which is encouraging to see this robust activity happened in August, which is a summer holiday in the country that has boosted a lot of the activities. Obviously, you do want both to be above 50 to show a bit of expansionary, but at this juncture, you got to focus only, at least primarily, on the sectors that the country to rebalance its economics to, which is service sector. Shows a bit of an improving picture overall in August.
We're left still debating economic headwinds here, but globally, if we think about it, we're waiting out for central banks to cut interest rates, the Fed, namely the big one we were watching. What does this mean for China in terms of the levers it's willing to apply at this stage? Is it going to sit back and wait it out, see what strength comes from the global economy, or do you think it's going to be tougher in terms of the action it takes from here to try and shore up domestic demand?
Actually, the sooner the better. The Fed sooner making the decision is actually will make PBOC's job easier. In fact, they cut rates about a few weeks ago. They are waiting for a bit of clarity from Fed to make sure their actions is coordinated in a way. So in my opinion, if Fed make earlier of this month, they make a decision on their interest rates that actually make China's monetary policy a lot easier. You see the RMB's move is really in conjunction to price in that if US start to cut rates and that interest rates differentials between the two countries should rebalance to what it is today's current level. At the end of the day, I think clarity actually will help China to be more decisive on the monetary policy. At the moment, they do continue to help on mortgage rates and some long-term rates, but by 25 basis points, they can easily cut a bit more, but they're just waiting for clarity. I think the sooner the action taken by US actually will help China.
We need to take a step back and have a more holistic view on this. Your conversation between you and Karen was fantastic, but you're talking about what the PBOC can do, what industrial policy can be changed. And actually, isn't the root of this problem that the private sector has been so curtailed, those amazing technology companies that China had beginning to bestride the world, they've had their wings clipped, and actually the private sector, rather than what the state can do and what the PBOC can do, the private sector would be where the growth roots would come from, but it just doesn't feel able to.
Private sector absolutely have to lead and drive China's economic growth, period, the end. Right, spot on. Obviously, the PBOC is making sure liquidity is sufficient in the system. That's job one. Job two, obviously, you got to give them a favorable policy for them to take off. You also nailed it, which they have been doing over the last 6 quarters of announcing accommodative policies from top down. The third one, why they haven't picked up, they have been slowly, gradually. If you look at the electrical vehicle, which you remember, if the country wanted the leadership in the country want China to focus on 3 industries: EV, clean technology, and health tech. And EV clearly shows a great result in August. And then this time, I went back to China for summer holidays. I literally see electric vehicles everywhere. Infrastructure is top class. Charging stations is everywhere. I live in London. We know where our charging stations or infrastructure is. If you go to China, you'll be impressed by the infrastructure there. They are there. And of course, the adoption rates for EV is only at 35%. Obviously, the tier 1 cities are 65%. That has a huge room to go. If those companies continue to focus on domestic growth, domestic consumptions, which is enough for the company to continue to grow from here, you're absolutely right. Private sector has to drive. Private sector is contributing majority of the economic growth from 2000 all the way to probably about 18, 19 is the majority driver. They need to be back on track to become the leader again.
And another part of the equation must be persuading Chinese consumers, the Chinese people who had such a shock and are still having such a shock in the value of their property assets, whether they own 1, 2 or 3 or what have you, to kind of save left. The gross savings rates in China are astronomical, even for those who, or especially for those who have kept their jobs as well. Those Chinese consumers just don't want to part with their cash in the same way that other constituencies around the world do they?
I absolutely agree. The saving rate is really high, despite the bank keep on cutting the fixed term deposit rates to now is just a little bit over 1% from nearly 4%. It's a huge cut over these 2 years' time, but households still keep on saving. You're absolutely right. Interest rates, it didn't really help people to spend, and because of the real estate sector's repricing. I have been a long-term bear on real estate in China, but I do think now you start to see a bit of a stabilization in terms of price. There's an indicator monitor 70 cities, major cities in China on that price. It continue on the falling trends, but it starts to stabilizing. I do believe the majority of consolidation is now behind us. You will see a bit of a consolidation, but start from tier 1, tier 2 cities, you will see a bit of stabilizing. One, on price, and then second, you will see a bit of a stepping in from the states to take over some of the potential equivalent of ours of a council house. Second and third, you will start to see a bit of building up activities, start to kick off from slightly the outside of the city, slightly on the rural area to kick in. You will see a bit of a recovering sign, let's put it this way, in real estate market, but you will not see, the booming you have experienced in the last 10, 20 years.
Just finally, can I ask you about some sort of consumption stimulus? We keep on hearing about it as the go-to potentially for China. Do you think it's going to be forthcoming? And if so, in what type of size?
They have started on the smaller scales, Karen, let's say. When you go to China, the majority spending power is really like my parents' age, okay? And also, they also had offered trading of the old applicants in household. Literally, my dad did too. He traded his old TV, he traded his old air condition to buy a new one. The shops giving about 20% discounts, and the country, the leadership, local state governments also offers 20% discount. So you see a lot of trade-in program. They announced that it is happening, not at the large scale they'd like to, but I think at the end of the day, they have to boost consumptions, which give you the discounts and coupons. A lot of the shops, even in tier 2 cities in China today, are offering from the shopping center to say, if you come shop here, you buy some, credits from the shopping center directly, you got a 5%, 10% discount. Different skills, different shopping centers applies. It will help, not the large skills yet.
Superb. So many ideas there. Thank you very much indeed for that. Very nice to see you as ever, of course. Xiaolin Chen, who is joining us from Crane Shares. Right, moving on this show. Very busy day for Monday especially. Attention turning to Friday's non-farm payroll print. After the Fed's favoured inflation metric comes in line with expectations. We'll take a look at that. Plus Israel bracing for a general strike after mass protests roil Tel Aviv. The Prime Minister Benjamin Netanyahu facing increased pressure after the deaths of 6 Israeli hostages. And we'll bring you plenty more analysis from Germany as the far-right AfD wins a state election for the first time. Don't miss our conversation with Carsten Nickel, MD at Teneo. That's coming up in just under 1 hour's time.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
More data rolling across the tape Friday and really encouraging the markets forward as US inflation edged higher in July, according to a measure favoured by the Federal Reserve as the central bank prepares to enact its first interest rate reduction in more than 4 years. The personal consumption expenditures price index rose 0.2% on the month and 2.5% from the same period a year ago. That was in line with estimates. And don't forget playing ball on the data, something that the market is looking for at this stage. Any heat in the numbers that would stand in the way of a Fed rate cut would be seen as potentially a negative at this stage for a market that is now winding back its expectations of a 50 basis point rate cut, but still keeping alive 25 basis points for this month. You can see as a result very firm ranges across the major boards Friday. In particular, again, tech heavy focus, 1.1 up on the Nasdaq, a similar size of gains for the S&P 500. The Dow still firmer but somewhat left behind in that rally in that Friday session. But across the markets for August, you can see, and what was an incredibly bumpy trading month. We were talking earlier in the show about the sell-off that happened, the extreme violent action just in a couple of sessions, and the recovery trade that took place in the wake of the selling. You can see it left us with ranges that were actually firmer. The S&P 500 up 2.3% for the month, leading the charge. Not too far behind, though, the Dow 1.75% to the upside. I want to take a look at the dollar. I mentioned what we were thinking about in terms of the interest rate expectations now on markets, and as a result, dollar has just been paring back some of those expectations for a 50 basis point rate reduction. That said, we're still perched firm as we count down towards payrolls. You can see dollar making some ground in some of the sessions overnight, but giving back some of that territory morning session. Sterling euro this morning now trying to climb high with 131.29, euro dollar 110.48. Dollar yen, we're 146. So just giving back a little bit of that overnight territory. Don't forget the US markets shut later on today for Labor Day. So it may have some bearing on liquidity that we're seeing in terms of some of the global markets. In terms of the Asian equity markets today, let's take a look at Japanese stocks trading up by about 0.1%. Hong Kong stocks are down 1.6%. Again, the lack of direction we could be getting from those US markets. The Chinese stock market trades down. The weak data we saw on over the weekend numbers on the official PMI versus the Caixin, slightly mixed picture again. So Chinese stocks trading weaker. We are slightly firmer for the Australian market. Now, former Fed officials have told CNBC what the latest PCE report could mean for Fed policy next month.
We've got a resilient consumer, several pieces of data that suggest the consumer remains resilient. You know, real incomes have gone up, wages have risen faster than prices, so most American households have more money to spend, and that should sustain the economy, and it's really good to see inflation coming back down to more normal levels.
They have to continue on their deliberate course, which is what Powell has been very good at, particularly since they recovered from their letting the inflation horse out of the barn, as I like to say, with the transitory argument. So I think a quarter point cut would be a good start, and then we'll just have to see what the data shows us from there.
This will put the Fed squarely on rate cut in September. And I think it's going to be 25 basis points. And I think the debate now will shift out to the November-December meeting. And I think the baseline there is 25 basis points at each of those meetings as well.
It's a fantastic week for data. If you're a data geek and you're obsessed about these interest rates, and I think some of you still think it's going to be 50 basis points out there, don't you? It would take a terrible payroll figure and other ancillary data to have 50 basis points on the 17th, 18th. That's when you got the meeting. Anyway, busy week on the data front in the US. A string of labour market indicators due. And I think that's the key. It's not just one piece of labour market data. The US ISM manufacturing is due today, ahead of the JOLTS report Wednesday, as well as the Fed's Beige Book for July. That is coming on Wednesday. I'm just slowing up a bit because I saw Adam was rushing to catch up with me. Thursday, he's the director, by the way, not a voice in my head, both. Thursday will bring weekly jobless claims before Friday's all-important non-farm payroll report. The New York Fed President John Williams and Fed Governor Christopher Waller will also deliver speeches on Friday.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.